Hey everyone, today I wanted to talk to you about a Vancouver real estate market update, talk a little bit about what's happening on a national level as well. Today is October 25th. We did just have the Bank of Canada this morning announce a rate hold. We're not raising interest rates or lowering them. That wasn't expected, but we are holding pattern. So we'll talk a little bit more about that. And yeah, reach out to me anytime if you have any questions. Again, I'm Roland Kim, realtor in Vancouver with the Kim Boona team and Keller Williams. And we're consistently in the top 1% of realtors, so we're here to help you. All right, so let's get started. This first slide that I want to show you is an ongoing market trends report that I always graph. So what I just checked it today, and as of yesterday, actually, we are averaging around 66 transactions a day, which means that I estimate around 2,000 transactions will happen in the Vancouver Real Estate Board in October. So that'd probably be about a 5-6% increase versus last October. However, it's definitely lower in percentage versus the previous few months. And what we found up until today, again, keep in mind that the interest rate held today with the Bank of Canada, and so that likely is going to spur on some more activity, I would imagine, in November and into half of December. But as of right now, the last few months have been kind of slow. The last month especially slow, and that has been continuing in October so far. When you look over the longer term trend, this graph is showing you the sales volume in the province over the last 10 years. So what you see is that the interest rate from the Bank of Canada have clearly impacted our sales. We had the height of the market that you can see in 2022 on price and 2021 on sales volume, which was the surprise coming out of COVID. And then earlier this year, it got a little bit busier, kind of peaked in April of this year and April, May, and then has been slowing down since then and on a downward trend. This graph is showing you the active listings in the province and over the last 10 years. And we're up about 8% year over year on active listings. So sales are down, active listings are up. All that being said, we are pretty established in a buyer's market, continuing to trend downwards. And that is interesting because we're often in a seller's market. So again, I often say that we're in a balanced market when both the seller and the buyer feel like things should be better. And that's kind of where we are right now. Prices are pretty darn stable, but there is flexibility on most sellers' pricing if they've been on the market for a while and if they have a purpose of sale. And yet, it's a very small band of adjusted room that a seller will move within. And so if you're a buyer and you're too aggressive, you're not going to see the results you want. The average price in the province is currently $966,000. That is a 5% increase year over year for the month of September. Again, when you look at the height of April 2022, so just about a year and a half ago when it was that frenzy, we went almost to $1.1 million. So the average price in BC was around $1.06 million. We're about 100,000 below that, but 5% above last year at this time. When I look at my local board, so the Greater Vancouver area, and then also the Fraser Valley board leading into Chilliwack, what I see on unit sales for the month of September is we're certainly up year over year, but keep in mind that from last June in 2022 to the end of last year, it got slower and slower. So although we're higher year over year, it's still quite a slow transactional market. And we have, in Greater Vancouver, we have on the price have gone up 5% year over year. In the Fraser Valley, it's gone up 8%, Chilliwack double digits at nearly 12%. Active listings are also up, as I've mentioned before. In Greater Vancouver, you have 9.2% increase in the volume of active listings currently on the market. That means we almost have a 6-month supply of inventory currently based on the volume of sales that are happening. That is substantially higher than it has been for many years. That is also why a lot of sellers are asking me, why is it taking a lot longer to sell a property? What's the average days on market now? They certainly have increased versus what a lot of sellers were used to a couple of years ago. What we're seeing here on the building starts in the province is that we're pretty consistent. We're the 6-month moving average in the province has fallen about 3.4%, 3.5%. The reason I show this chart is because what it is showing you is we continue to focus in many ways real estate on a supply perspective. So we try and control supply or influence supply by increasing interest rates or making qualifying perhaps harder. And what really I find fascinating is that our inventory load is not dramatically increasing. So none of the changes yet that any form or level of government have done over the last few years is increasing the average supply in the province anything substantial. And that will have a big impact in my summary slide of why the market continues to be where it is. Simply stated, because the housing starts are pretty consistent. They're slightly up year over year, but they no dramatic improvement or increase of inventory in the housing starts has begun. What you see here is the interest rate landscape. So the Bank of Canada rate, you can really see that from January of 2022, it just took off, right? Good news today, again, the bank rate has held, and so there's no increase in the interest rate from the Bank of Canada. I believe, and it's only my opinion, but many people that I speak to as well probably believe that we are at the peak of the interest rate, and in a year's time, should be lower. Who knows how much lower? And we'll probably trend sideways here for a while inflation continues to normalize and go sideways. So I really, really find this slide powerful, and it comes from Statistics Canada. So this is the net international immigration to Canada. And so for decades, we didn't go over 100,000 immigrants into Canada. When I immigrated in 1986, I mean, the immigration load was around 46,000 net. And then for several years here, we stayed, under 100,000. And then since 2016, we've kind of averaged around 150. Then COVID hit. Obviously, it was a negative net. And since then, as we've heard from the not Bank of Canada, from the Government of Canada, we are really focused on increasing net immigration into Canada. The last few years, we're now, over 250,000, probably averaging around 275,000 net, on target to be at, I believe, 500,000 is what they project by 2025. Now, a lot of this is, focused on bringing more talent into the country, needing that workforce. But what this is really going to show and continue to, challenge is there's a huge lack of inventory even before this increase of immigration. And so this is one of the biggest underpinnings why I see no reason why the prices in certainly Vancouver, BC, Canada are going to go down in the years ahead. They might not go up a lot. They may trend sideways, even in an expensive landscape, but the net immigration is such a new variable that we've increased dramatically. It appears that we've currently doubled it from previous norms and on path to triple it. And we've never experienced what that's going to do to our supply, our demand side rather. All right, so we're talking about the inflation. So inflation rate has gone down last month in September, down slightly from 4%. It was at 3.8%. Interest rates continue to influence the increase on that side, as do gasoline sales. But a lot of the other consumables have been reducing. A lot of the excess cash that people had in post-COVID has been spent, so to speak. And so we probably are going to continue to trend slightly sideways towards and lower towards that, bringing that inflation to 3% and below 3%, maybe later next year. And this result here last month, where inflation went down, is part of the reason why the Bank of Canada today did not raise their overnight rate, and also why I believe our interest rates are really high compared to what the near-term average was. But we are at a peak, in my opinion. Make sure you get your own opinion. All right. The other factor I wanted to talk about is the reason why I believe our housing ahead is very stable is because we are in a high employed, low unemployment landscape. And although unemployment has gone up slightly, it is so substantially low compared to a long average. And so the year ahead, the decade ahead, so far everything is looking like people will continue to be employed. There's a shortage of great staff. Many roles go unfilled. And so that, that means that people will be working. And so that is not going to put pressure on folks selling because they don't have a job. So this is another slide for Canada. It's the residential sales activity in Canada. What you get to see here again is, where are we on average? We certainly had post-COVID and during COVID really, really high residential sales, which was very unexpected. And although we're lower than our 10-year average, we're not that dramatically lower. It's just we're coming a few years after, a really, really busy time. The new listings, however, across the country are higher right now than many times in the past decade. And so if you're a buyer and you're saying, oh my gosh, there's nothing good out there, you have to ask yourself, are you being realistic about what your expectations are? Because, based on nationally, the listing load is above average. It's higher than it normally is. And again, here we're seeing the months of supply and sales to new listing ratio. And so months of supply, again, I'd say are, nearing above average if you're looking at it on a national level. This is the residential average price in the country. And so for year over year increase, sorry about that. So if you look in BC here, we talked about that average increase year over year. And so every province in the last year, September versus September, has a higher average price other than PEI. And so that is interesting. The residential average price in Canada is around, let me see here, around 650,000. It's quite impressive when you look here and you see in January of 2025, the average price was around 250, and now the average price in Canada is around 650. So we are definitely operating now in a mature landscape, and that's I think where we'll stay. So this is the sales activity, the historic forecast, and the 10-year average that you see. And here we have the different provinces. Again, what we're seeing is the percentage change on the price this year, and then the projection by the Canadian government and the Canadian Real Estate Association on prices next year. So it appears across the board, we're seeing modest price increases projected for next year and a modest, average price in the country and each province to occur. Alberta certainly appears to have the highest growth in the year ahead. But all that being said, consensus currently from these sources are that the price in a year's time will be a little bit higher than they are today. So in summary, I believe, and again, just my opinion, so you make sure you get your own custom advice for your needs. But I believe that we are at the peak of interest rates currently, and it's going to take quite a while for them to come down. So, adjust yourself accordingly. But I believe that we'll have a little bit of a busier November now that the Bank of Canada has held the overnight rate. And then it will slow down, of course, into December. And I think we're going to have a really big spring because there is so much consumer demand on buyers. There's so many buyers that I know that have not completed their upgrade or their purchase that they wanted to do this year. That is, in a landscape where the consumer household debt is extremely high. The buying power for consumers is noticeably lower. And so it's almost like we know that things are tough. It's tougher to stretch the dollar. It's certainly harder to qualify for the mortgage. And yet we continue to have lots of demand because of a stable economy. Employment is strong. There's a huge amount of immigration that's happening right now, that's happening in the years ahead. And then the biggest thing that we still have not addressed, and certainly nothing is indicating to me that it's changing, is we continue to look at real estate from a demand perspective versus a supply. And, for decades now, we're short on housing units, and that is continuing to put pressure on the price and the activity levels. And so in essence and in summary, both locally and nationally, for what I see, that the housing looks pretty darn stable. And we are expecting, I certainly am expecting a busier 2024, a little bit increase on the price, but a lot different coming out of this dip than previous dips. So a lot more tempered. And saying that, we got long-term prices and unit sales are trending higher, but modestly. And so, adjust your plans and your goals accordingly. Thank you, everyone. Again, reach out to me if there's anything I can share with you or talk about real estate. I love helping clients with their assets. Thank you.